I see a lot of people out there debating, are we going to have a stock market crash in 2024 or not? And I'm here to tell you here today that we are in a stock market crash right now. Three core things I want to address in this video. What is a stock market crash? What is a market crash? There's three characteristics. If you do not have these three characteristics, you are not in a stock market crash. If you have these three characteristics going on all simultaneously, you are 100% guaranteed that you're in a stock market crash. So we'll address, do we have all three of those things? Spoiler alert. We do have all three of those things going on simultaneously, which means we are right now in a stock market crash. We're going to address the third thing here today. Are we at the beginning of this crash? Are we in the middle of this crash? Or are we at the end of this crash, right? And, it reminds me of if I asked you, are you spinning around right now? You'd be like, no, I'm not spinning around. I'm just, watching this video on my phone or my computer or the TV or whatever, right? But in fact, we are spinning. We're spinning very rapidly. Just no one really realizes it. Kind of like no one really realizes we're actually in a stock market crash as we speak right now, folks, okay? I'm going to address this. I appreciate y'all joining me as always. Thank you so much for being here. Thank you for being subscribed. This is a good one here today. This is a really good one here today, folks, okay? Alrighty, so what are the three things you have to have a stock market crash? And I started in the stock market crash of 08, 09. That's when I started my investing career, we can call it, right? I studied the tech bubble crash. I studied different crashes we had back in the 80s, including the 1987 crash. I went all the way back to, obviously, prior to the Fed and prior to, really that's called the modern economic system we're in, and looked at those crashes. And there's three things without a doubt. Every single crash has these three things all in common. And without these three things, you're not in a market crash. The first one is quality stocks everywhere are at multi-year lows. That's the first thing you need. You need quality. You can't just be some, crap stocks that no one ever heard of, or some small speculative stocks that are multi-year lows. It has to be quality companies that if you said that company, everybody knows the name of that company, and they're like, I know what that company does. What? That's at a 3, 5, 7, 10, 12-year low? What? The second thing you have to have pretty much almost no stocks at 52-week highs, like very few and far between. Like it's almost like, what? I can't believe a stock actually in this market reached a 52-week high. Like how is that even possible? And the third component you have to have is you have to have fear in the market. And so what we're about to go through here is all three of those characteristics. And like I said, I gave you a spoiler alert. We have all three of these going on simultaneously, but let me prove it to you right now. First off, let's go through that first point, okay? Do we have super quality companies at multi-year lows all over this market? And the answer is abso-dang-lutely. This is Clorox Company. Everybody watching this video knows the Clorox Company. Everybody knows Clorox bleach, okay? And here we are with Clorox right now trading at prices it traded last at in like 2018, 2017, 2016. Multi-year lows on Clorox Company at this point in time. Target, one of the most well-run retailers of the past decade, I would say. And Target's always known as a very premium quality stock in the stock market. This stock is trading at similar prices that we saw back in 2020, similar prices that we saw back in 2019. Folks, we're 2 months away from 2024, okay? And this stock is at multi-year lows. Dollar General, and one of the biggest dollar store brands out there, usually known as a very premium quality stock. This stock right now is trading at prices we last have seen back in about 2018, 2019 time frame. If we look at Campbell's Soup, Campbell's Flippin' Flapjack and Soup, this stock is trading back at prices we last have seen in around 2018, 2019 for Campbell's Soup. Remember, a lot of these businesses aren't just super famous companies and seen as stable businesses, but a lot of them are seen as almost like recession-proof type companies, and yet they're still trading back at many multi-year lows. J.M. Smuckers, are we talking jam or are we talking jelly? This stock is trading back at prices we have seen back in 2020, 2019, 2018, 2017 for J.M. Smuckers now at this point in time. Estee Lauder. Estee Lauder is certainly one of the most quality companies in the entire stock market. This stock price is getting wrecked. It is now down to prices we have last seen in around 2018, 2019, folks, okay? Whirlpool, look at this stock. We have seen this stock even back, if you go back to kind of 2018, 2019, Whirlpool was trading higher than it is today. The only time period Whirlpool in any time in the past 10 plus years really has been trading lower than this was back in the Rona crash, folks. Back in the Rona crash. That's extraordinary, right? Look at PayPal. Look at PayPal. You've got to be kidding me. PayPal's trading back at prices it was back in 2017. Now, keep in mind, PayPal back in 2017 didn't even have close to the revenues this company has, didn't have even close to the amount of users it has now, didn't even have close to as much net income as a company does now. It was a joke of a company compared to the PayPal nowadays. But yet this stock price is all the way back to the same levels it was in 2017. Foot Locker is back to a price that look at this. Foot Locker, the only time we've seen the price this low was in the Rona crash when the malls were shut down and we thought everybody that was a mall-based retailer was going to go bankrupt. Bankrupt, folks. That's where Foot Locker is back to. And if you pull this stock up anytime in the past 10 plus years, you can't find it lower than right now, outside of the Rona crash when malls were literally closed. Like, how crazy is that to think, right? Walgreens Boots Alliance, one of the biggest, pretty much the second biggest pharmacy chain out there, right? I couldn't even find recently. I went all the way back to kind of 2015. Walgreens hasn't even been this low since 2015. I had to back it all the way up to around 2009. In the lows of the great financial crisis, that's the last time I could find Walgreens trading around the same price it's trading at now, was in the lows of the 2009 great financial crisis crash, when we were afraid we were going to lose the entire financial system, when unemployment was skyrocketing into 10%, and we didn't know where the bottom was going to be. What an extraordinary situation. Look at Nike, certainly one of the most premium names in the stock market the last 30, 40 years, right? Nike is trading back to prices it's actually lower today than it was prior to Rona. Prior to Rona, if you go back to late 2019, going into 2020, this stock was trading above where it's trading at right now for Nike. Cheesecake Factory, you got to go back outside of obviously the Rona crash when restaurants were shut down and everybody thought all the restaurants were going to go bankrupt for a moment there, right? Outside of that scenario, you've got to go all the way back to around 2011, 2012. For Cheesecake Factory, one of the most premium names in the overall food space, restaurant space, is trading at over a decade. You have to go back over a decade to find it. Wow, it was back at these prices back in 2010, 2011, 2012. My gosh. Winning Resorts, outside of obviously the whole Rona crash and the whole shutdowns, which once again, people were scared that all the hotels were going to go bankrupt. Right? Outside of that, you're going to go back to around 2016 to find Wynn trading at these sorts of prices, even back in 2010, folks. That's how far back in time we got to go. So basically, Wynn's trading at the same price it was trading at 13 plus years ago for one of the most premium resort companies in the world. And think about how much money Wynn has made over the past 13 years. Add up all the net income, all the dividends paid, right? All the new properties added. How much of a stronger overall company it is today versus what it was back then. And that's what we're talking about here, right? Align Technologies, which makes like the invisible braces and things like that. Phenomenal business model. They almost have like a monopoly type market share in their market. This stock is trading back at prices we saw in the Rona crash, right? In 2019, in 2018. And think about where Align business model is today versus where it was in 2018, right? It's a night and day difference. But that's what we're talking about. This is the most shocking one of all of them. Of everything I just showed you, this is the most shocking. Everybody watching this video right now, you've heard of Southwest Airlines. You probably fly on Southwest Airlines. You've probably flown on Southwest Airlines. You might love Southwest Airlines, okay? This is the most shocking one. This stock is lower today than it was in the Rona crash. How does that make any damn sense? We talked about travel was shut down during the Rona crash. And there was ultimate fear about all the airlines were going to go bankrupt because no one can travel now, right? And Southwest Airlines is trading cheaper today than back there. That's the most shocking one of all. We have to go back to like 2013 or so to find Southwest, so about a decade ago, to find Southwest Airlines trading at these sorts of prices. That's extraordinary, folks. That is absolutely extraordinary, and this is a market we're in right now, okay? So, first thing, do we have a check when it comes to quality stocks everywhere at multi-year lows? Absolutely. Every single, and I could have kept going. I could have showed you guys a million charts. I could have kept going. Every single stock I just showed you is a quality premium name in the stock market. The type of company everybody knows, the type of company that if you said, how do you feel about, putting my money there for the next 10 years, people would be like, oh, that's probably a pretty good place to put your money there for the next 10 years, right? And all those stocks are at, 4, 5, 10, 12, 14-year lows, 15-year lows. Extraordinary, folks. Absolutely extraordinary. So next thing we have to answer is, are we pretty much almost having no stocks hitting highs right now, right? If you're in a real stock market crash, you have hardly anything hitting highs. And so how do we look at something like this? Wall Street Journal does a great job of basically telling us stocks that are hitting 52-week highs and 52-week lows, okay? There's only 20 stocks in the entire New York Stock Exchange that basically hit 52-week highs. 20. Meanwhile, there's 354 stocks that just hit new 52-week lows. Oh! No, you know what I was thinking? I was thinking, well, how many stocks are in the New York Stock Exchange, right? Because there's going to be a lot, right? And what would you guess? If I asked you how many stocks are in the New York Stock Exchange, how many stocks would you guess? My guess was I thought probably between 1,000 and 2,000 stocks are in the New York Stock Exchange. Well, I was a little off. There's actually 2,800 stocks, so nearly 3,000 stocks on the New York Stock Exchange, and only 20 stocks hit 52-week highs out of nearly 3,000 stocks, folks. Okay? This shows you that there's absolute devastation going on everywhere out there, and the chances you're in a stock that is hitting a 52-week high is like winning the lottery right now. That's how bad it's gotten in this market. So to answer that question, have we pretty much hit, are pretty much no stocks hitting highs? Absolutely. So we got another check mark there. Next check mark, fear. Do we have real fear in the market? Well, there's a few ways to gauge fear outside of just, stocks hitting multi-year lows and hardly any stocks hitting highs. There's specific gauges we can look at. And let me tell you, fear's all over this market. Here's the first thing up. This is a fear and greed index, which measures 7 different categories to basically measure if there's, people are fearful in the market, extremely fearful, neutral, greedy, or extreme greedy, okay? And here's the deal. We're in extreme greed right now. We were in extreme greed. That's the last thing we're in. We're in extreme fear right now. We're in extreme fear. We were in extreme fear yesterday. We were in extreme fear last week. And guess what? A month ago, we were also in extreme fear. So we've been in extreme fear for a period of time here now at this point in time, okay? On top of that, add this on top, right? This is AI investor sentiment. So this is how investors feel the market's going to be for the next 6 months. They feel bullish, bearish. Right now, we're at 43.2% of investors are feeling bearish about the stock market for the next 6 months. That compares to an historical average of 31%. So we're over 12 percentage points higher, for the amount of investors bearish on the stock market the next 6 months. So based upon those two gauges, clearly the market's very fearful, the market's very bearish. All right, guys, let's get into this.
Yesterday, both companies reported better than expected earnings and revenue, but Google's cloud revenue missed expectations, and as a result, that stock is down by about 6.8%. Joining us right now is Paul Meeks. He's a veteran tech investor and professor at the Baker School of Business at the Citadel in Charleston. And Paul, let's dig through these numbers. If you were just looking at the quick read on the earnings report on this, you would have said, okay, great news. They came in with earnings and revenue above expectations.
Hold your horses. Hold your horses. It just fell off a cliff worse, folks. Check this out. Oh my gosh, look at this. Google McDougal's getting close to a 10% down number. For Google, that's crazy move. Shopify now is down almost 7%. Amazon's down 5.5%. AMD's down 5+%. Oh my gosh. PayPal's 51. Oh my gosh. And Microsoft's barely holding on to gains now. And Microsoft's only up 2% and some change, which just shows you how bad it is out there here today. Oh my gosh. We'll go ahead and we'll keep that up while this video is going on. My goodness, guys. Nasty.
It's a big disappointment.
Well, you hit the nail on the head. They were expected to deliver $8.6 billion in Google Cloud revenue, and they came in with $8.4 billion. Now, they don't give guidance, so this was a Wall Street estimate calculated by Wall Street. The $8.4 billion is still 22% growth
Yep.
And even though Microsoft, with its cloud business, Azure, grew 29%, so they gained some share, it's still pretty robust growth by Google. And I actually think that the reaction today, down 7% on a miss that was about $20 million on an over $8 billion number, is a gross overreaction. I actually think Alphabet's a pretty compelling buy right now, today.
Okay, that's a strong move on this. If you want to dig through the rest of what was happening there.
Do I agree with this gentleman that Google, I'll let him finish. I want to hear if he has any other points to share, but I will share if I think Google's a buy here today.
You probably liked a lot of what you saw when it came to advertising and some of the other areas where they've operated pretty well. What did you think digging through the rest of the numbers for Alphabet?
So digging through the rest of the numbers, and I was on the quarterly webcast live, everything looked pretty good. And of course, this company, until further notice, is going to be driven by the digital ad market. And that accelerated in all kind of sub-segments within that. And so I'm pretty pleased. Joe said the right thing at the beginning of the segment, that nothing looks good, including Google, other tech stocks, and maybe even generally other stocks in overall. Technicals look pretty poor. So do you rush in and buy Google aggressively? I'd actually buy it. Today, the stock's going to break through its 50-day moving average, which is 134. We'll open at 129. I think that you buy a little bit and maybe scale into Alphabet in that range of 125 to 115, more for technical reasons, not because we've had a poor inflection in fundamentals with that cloud business. I think they're going to be just fine over time. I don't think this is really that relevant.
Let's talk a little more about the technical issues. What concerns you? Where do you think we're headed?
Okay, before he gets into where he thinks Google McDougal is headed here as far as the stock price, let me answer the question. Do I think Google's a buy today? What do I think are good buy prices for Google? So my personal opinion is, as of today, Google, yes, absolutely, is a good buy, right? Doesn't mean it can't go lower short term, as all stocks can go lower. But looking at the valuation multiples now on Google at this point in time, Google's probably trading under a 20 forward P likely right now, okay? Under a 20 forward P, that's very attractive. Then you say, okay, what if we have a recession over the next year and Google's numbers aren't quite as strong? Okay, so maybe you're trading at a 23 to 25 during a recession. That's actually still very, very low, so whichever way you want to slice it. Google McDougal is, priced pretty darn attractively. Now, they do have the government stuff, so that's an overhang on the stock. So that's why likely forward Ps will stay under 30 for probably the next several years, to be honest, which is perfectly fine. I just look at it as easy buy. As far as, price targets and those sorts of things, anything under 140 is a buy for Google. Anything under 125 is like screaming top of the lungs type buy in regards to Google, right? In this market. Now, last year, it was a little bit different. And the reason it was a little bit different last year is there were so many other opportunities. Last year, you could have said, well, what about Google at 100 versus Meta at 100? Well, if both those stocks are 100, Meta's easier buy, like a huge easier buy, if both those stocks are even at that point in time, right? So that's where it comes down to where's the best place for your money. Last year, Google was technically cheaper than it is right now, but we had way better deals out there. NVIDIA was $110 last year. So you got to compare with the time period you're in right now. And the time period we're in right now, Meta's 300 plus, NVIDIA's 400 plus, right? You look at some of these other opportunities in the market, and you got Google McDougal not doing much here with the earnings they had, which was a phenomenal quarter. Yeah, it is a buy.
Yeah, unfortunately, we've had a nasty breakthrough to the 50-day moving average, and it'll be on some pretty high volume this morning. So that looks pretty bad. We've been in this range above the 50-day support ever since very early 2023. And so, yes, that's why I suggest maybe you buy a tidbit based on what I think is an overreaction to the Google cloud revenue miss, but scale in over time because we could go lower. We could go down to 125, maybe even 115 on the downside. But yeah, the technicals or the price chart looks, unfortunately, pretty nasty for this company, despite its long-term fundamentals are solid. And so I would go in, as I said, kind of slowly and deliberately, more for a market technical reason than a fundamental reason.
So if it's not fundamentals and it's the technicals you're watching, what do you think is driving the technicals? Is it the broader issues facing the uncertainty, facing the markets, facing the economies, facing global peace at this point?
You're absolutely right. And I like the discussion that you had at the beginning of the show. Yeah, we have a lot of issues, the geopolitical concerns, the lack of a speaker in the House of Representatives.
Yeah.
And of course, with tech stocks, they are uber sensitive to the movement in rates. Yeah. And the big jump that you had in Alphabet and other tech stocks earlier in the year was based on the premise that before we got to the end of 23, we would start to lower rates. And now we have maybe one ratchet up, and that's really not much of a big deal. We're very close to the end of the rate hikes, but higher for longer. If we don't start to lower rates, maybe until even this time next year, that's the biggest problem of all with any of these aggressive growth stocks, Alphabet and others included.
Well, Microsoft shares are up by better than 3% this morning. Do you like those shares too? Because it looks like they beat on every metric, and their cloud spending cloud revenue looked really good too.
Yeah, their cloud revenues accelerated, which I thought was very impressive. They also talked that they now have 1 million subscribers, paid subscribers for Copilot. So you get a little bit of that AI push finally. But I would own Microsoft. I do own Microsoft. I would own Alphabet. I do own Alphabet. But I would buy Alphabet today in this weakness. I think Microsoft is fully priced. Wouldn't buy it, wouldn't sell it, would just hold it. But I do see opportunity in Alphabet shares.
All right, before we get into this next video, what do I think about Microsoft stock? Is Microsoft stock a buy here today? And the answer to that is, it actually is a buy as well here today. I do not own Microsoft stock. I mean, at some point in time, it's just like, how many stocks do I want to own, right? But I got to say, those Microsoft earnings are freaking phenomenal. In Microsoft, they're going to come through with their numbers every quarter. There's no debate like, is Microsoft going to miss? There's a lot of companies in the stock market. You go into an earnings and you're a little worried, right? Microsoft, you can never be worried about that company. They just come through every quarter, and they're either going to come in and meet, or they're going to come in and beat. And more than likely, they're going to come in and beat. And it's quarter in and quarter out with that company. And it doesn't seem like that's going to change anytime soon. So for Mr. Softy, man, just what Satya Nadella has really done with that company over this last 9 years has been absolutely phenomenal. All right, next one up here. Tech Trade looks thoroughly exhausted. Looking forward to getting into this one, reacting to this one, and then we'll get bearish.
NASDAQ is where the bulk of the damage is today. Look at that, down near 2%. That's a loss of 236 points. Yields are very much a story today as well. Backing up yet again towards 5%. There's 491, the 10-year note yield. However, Joe, I do want to start with Microsoft. That is the story today.
By the way, thank goodness Microsoft came through. Could you imagine how ugly it would be in the NASDAQ today if Mr. Softy was down? Mr. Softy is about a $2.5 trillion market cap. If that one was down today, I mean, the NASDAQ could be a 3.5 to 4.5% down today if Microsoft was a down dog like Google is here today. Holy smokes, would that have been crazy.
One of the stories, at least the positive story today. Azure cloud revenue growth accelerating for the first time in a couple of years because of AI. You own the stock. Give me your take.
Well, it's good that we saw our cloud services growth back above 28%, which was the expectation that I had on Monday. That's where it needed to be. But overall, the impact of what we expected from Microsoft.
That's big right there, that uptick, right? By the way, I just want to say this real quick. I freaking love that we are finally getting to talk about earnings and something other than just, what's going on in the Middle East and what's inflation numbers and all those sorts of things. I love that we can actually finally talk earnings again.
On the market itself, its ability to stabilize the market, it obviously is not present. And Scott, the reason it's not present is these stocks are called the Magnificent Seven. Now we're down to the Magnificent Five. We've lost Tesla. We've lost Alphabet. We'll get into the reasons why we lost Alphabet in a few seconds. But just overall, for the ability of Microsoft to stabilize the market, and obviously the reason that it's not, you needed all of the Magnificent Seven to push up against a lot of very troubling signals within the market itself. I think we've done, at least myself, I've looked towards this Magnificent Seven, and I've looked away from the troubles. But what's going on this month in real estate?
By the way, let me be very clear. Google is not a weak stock of the Magnificent Seven. The stock price is down today, but those earnings were arguably the best earnings any company's reported so far this earnings season, okay, first off. Secondly, there's a stock in the Magnificent Seven outside of Tesla, that I believe is the second weakest stock. I believe Tesla is the weakest right now in the Magnificent Seven in the short term. If we're just judging off the next 6 to 12 months, Tesla's the weakest. What is the second weakest? In my personal opinion, the true second weakest stock in the Magnificent Seven is Apple. Okay, is Apple, the biggest market cap company. So that's just some food for thought there. Apple, the big question is are Apple's revenues going to go negative, or are they even going to be able to stay a little bit positive? And that's really the only question in regards to Apple, right? And that's not a question when it comes to Google. Google's growing very nicely. Alrighty, before we get into all these stocks and all the, everything going on there, I've got to speak about the state of the stock market, because there's a lot of things going on behind the scenes that not people understand what's actually happening here, why Wall Street's selling these stocks off so heavily, and how bad it will potentially get here, okay? The first thing you got to understand about this market is the S&P 100, or the S&P 500 closed today under 4,200. Now, why is that important? The reason that's important is so many of these Wall Streeters have been talking about as long as the S&P 500 stays above 4,200, we're fine. We're in the clear. I watch so much CNBC on a daily basis. I hear all these Wall Streeters go on. All these folks, all these Wall Streeters that run the funds and, that's all these folks do, okay? And they go on CNBC and they talk about what they're thinking in regards to the market and where they think things are going. And all these folks have been very clear. As long as we stay above 4,200, we're fine in this market. We just broke under 4,200. This is when a lot of these Wall Streeters start getting very concerned and very scared now that we broke under 4,200. It's a very important level. Do I care personally about the market being under 4,200 or above 4,200? I don't freaking care. But I can tell you there's a huge part of Wall Street that cares immensely about breaking under that 4,200 level, folks. It matters in a significant way to the state of the stock market right now. On top of that, you got TLT down again today. This is something that has just been brutal that a lot of people have been trying to get into, thinking they can bottom call TLT. And it's just brutalizing people right now where, and TLT is not usually something you would expect to lose a lot of money in, but unfortunately, everybody that's been trying to pile in TLT is losing a lot of money. It's not like a stock where a stock you kind of, go in with the expectation of like, oh, this could go bad and this could go bad fast. TLT is not usually that type of thing, but it is that type of thing right now, and it doesn't really seem like it's getting better anytime soon, right? The NASDAQ also just broke under 13,000 now at this point in time. NASDAQ got hit hard today, 318 points. And think about this for a moment. The NASDAQ got hit about 2.5% today. Imagine just for a moment if Microsoft had fallen today. Microsoft was the one dog that held up today. Just imagine if Microsoft fell, right? Microsoft, you're talking about that's about a $2.5 trillion market cap. If that baby would have fallen 5-10%, it would have been a 3.5%, 4%, 5% type NASDAQ down. Just a shocking day. Microsoft is, kind of held the NASDAQ together, even though it was still an ugly day out there, right? Now, here's Wall Street, and here's what they're very scared of, okay? Like why was Wall Street selling every stock in sight here today, right? Wall Street's very scared right now. They are scared of what's coming tomorrow. Tomorrow we get GDP data. We also get Jerome Powell talking. Now, there's a major fear that essentially the GDP data is going to come in hot. Jay Powell is going to come in super hawkish, and there's going to be a real potential of another rise of inflation going into 2024, and there's a real potential of the Federal Reserve raising interest rates. This is what Wall Street is scared of, and this is why they're frightened right now, okay? And so if you want to know why Google stock sold off 10 percentage points today, or almost 10 percentage points, it has nothing to do with Google's earnings. The numbers were phenomenal. Nothing to do with that. Nothing to do with the conference call, anything like that. The bottom line is Wall Street's freaked out right now, okay? Now, we got to ask ourselves, is this fear real, or is it more just an anxiety fear by Wall Street, okay? And in order to understand that a little deeper, you got to look at some more insight and data. And I have the data to show you if this is a real fear or not by Wall Street, okay? So this is Trueflation data, which Trueflation data I always trust more in the government data, in my personal opinion. And Trueflation data had us at much higher CPI numbers last year than what Wall Street had us at. Now they have us at much lower numbers than Wall Street has us, than the government has us at. I trust the numbers more than I trust the government numbers in terms of Trueflation. Trueflation has us at under 2.4%. inflation rate right now, okay? Now, in regards to this, right, there's a huge component that you got to understand of overall inflation data is usually housing, okay? Of the overall CPI numbers, housing. This is an article that was written by Barron's at this time last year, late October 2022. Okay, the rental market is cooling. Official inflation data won't show it anytime soon. And they were talking about probably at some time, maybe next year, late next year, you'll start to see, obviously, the housing data, the rental data start to come in. And this is a huge component of the overall inflation numbers, something the Federal Reserve looks at it in a substantial way, right? And in regards to this, okay, the reason rents are starting to go in the right direction is it all comes down to housing prices, okay? So when housing prices were going insane, guess what ended up following? Rents increasing dramatically. And you can get away with that as long as the demand's super high for rents, and on top of that, home prices are going up substantially. The moment that housing prices start falling is a moment that following year, you're either going to have to go down on rents, or you're going to have to keep rents the same. Or you're going to have to do some sorts of incentives like a lot of apartment complexes are now starting to resort to, that I'm starting to hear in some of these hot markets, where they're doing incentives of like, you get 2 free months, you get this, they're not going up, right? And as somebody, I can just tell you that as somebody that's a landlord, personally, right? I have 2 real estate investment properties. I don't see myself being able to go up next year. I just don't. And I have a property in Vegas. I have a property in Arizona. I do not see myself being able to go up on rents in 2024. I think I'm just going to have to keep them flat. And this is something you're going to see in many of the biggest markets across the United States over this next year. Okay? Now, this is another thing. You have a crazy amount of supply. I don't think people even realize how many, how many insane amount of condos and apartments are being built in the United States of America. It's off the charts, record highs. Like, this makes what was going on back in the 80s and 90s, the 2000s, even in the previous housing bubble. This looks like nothing, in terms of all those past time periods. Look at the chart in front of you, folks. If you're just listening to this video, look at this chart for just a moment, okay? New privately owned housing units under construction, units in buildings with 5 units or more, okay? So what this basically tells you is there's a crazy amount of new apartment complexes in multifamilies that are hitting the market this year and will hit the market next year. With all of that inventory coming online and the fact that home prices are not going to be able to go up right now because of the mortgage rates we're in right now, this basically smells a situation that rents are either going to have to stagnate or potentially go, guess what, down, okay? Which is going to help CPI in a massive, massive way, right? Now, we had the largest drop in modern history in real wages. Real wages looks at like what a person earns versus what inflation's at, and we had the largest drop in modern history. We've just recently started to tick back up in regards to real wages. Now, I think we're going to play a little bit of catch up here over this next year or so in regards to real wages starting to pick up, right? So a huge component of inflation data, which goes around housing and rents, is no longer a factor. No longer a factor. If you have a home on the market right now, you have to drop your price, and you have to drop your price more over this next several months because mortgage rates are sky high right now. People can't afford it. And then on top of that, if you are a landlord, you have to keep your rents the same or you have to drop them over this next year, okay? And that's going to help immensely. And so very much like Halloween 4, she woke up from a dream and she realized it was just a dream I had that Michael Myers was in the room, okay? And he came out from under the bed. It's the same exact situation that we're dealing with right now. Wall Street's paranoid about we're going to get super hot CPI data and all this stuff's going to be a disaster in 2024. And I just believe they're in a dream right now. Now, the only other component you could really say, right, is oil prices and what that does to gas prices. Well, here's a real reality around oil prices. Oil prices are actually, you might think oil prices are sky high right now. Oil prices are actually down 3% in the past year, okay? 3% in the past year. So as of right now, oil prices are actually staying where we'd want to see oil prices at, right? Now, also think about this a little higher level for a minute, okay? You might have a very negative opinion of Joe Biden or a very positive opinion. You might think he was a horrible vice president. You might have thought he was a great vice president. You might think he's a horrible president. You might think he's a great vice president. I don't really care what you think, okay? But what I do care about is there's no debate that Joe Biden's one of the best politicians we've ever seen in modern history. That man wins elections. He knows how to play his cards right, so he's in positions of power. There's no debating that. You can debate if he's horrible or bad at whatever he does, but as being a politician, he's one of the greatest ever. He's better than the Clintons. Let that sink in for a moment. So, being that this man is so damn good at being a politician, do you think he's going to let oil prices run into the election? Do you really think that? With all the connections that man has, and a lot of people that potentially owe him favors, and how well he knows how to play this political game, do you think he's going to let oil prices run into an election year? He didn't become vice president for 8 years by accident. He didn't be such a great politician for all his time by accident. He didn't become president of the United States by accident, okay? The man knows how to play this game. So if you think that man's going to let oil prices run to $150 a barrel in an election year, I don't know, man. I got a bridge to sell you behind my house that goes straight over the ocean, okay? Here in Vegas. The man knows how to play the game, okay? So, oil price. Is oil price really a significant worry for 2024? My opinion, no. Are rents or home prices in general a big worry for 2024 for CPI data? My opinion, no, okay? Something to keep in mind there. Now, the Russell, folks, the Russell Wilson we're barely higher than we were back in September of 2020, folks. If you go back to October, if you go back to around this time, literally in 2020, the Russell Wilson was higher than it is now. That's crazy to think about that, folks. Let that sink in for a moment, right? And I just want to show you that so you understand the devastation of the small caps over the last 3 years or so, right? Now, let's start talking about some stocks, okay? Let's get into some stock talk here. So, first off, Amazon. Amazon earnings are coming tomorrow. Now, am I more confident, less confident in Amazon after I've seen now Google's earnings, I've seen Microsoft's earnings, I've seen Meta earnings, and all those matter significantly for ultimately Amazon. Google has a cloud business, so I've gotten to see their numbers. Google has an advertising business, obviously. I've gotten to see their numbers, right? And guess what? Amazon has the biggest cloud business, and Amazon has a huge advertising business, and now they're the third biggest business, right? I've seen Meta numbers now at this point in time, which Meta is obviously massive advertising company, right? And you're not going to advertise unless you're advertising a lot of goods on Meta, right? And I've seen Microsoft's earnings, which Microsoft has an ads component of their business, but they also have a cloud business, right, in Azure. So based upon everything I've seen and based upon what I believe is going on here, I believe Amazon's numbers are going to be booming. I believe Amazon's going to report some phenomenal earnings tomorrow, and likely some huge beats on several of the key categories, right? But with that being said, this does not mean that Amazon's stock price is going to go up tomorrow necessarily, okay? I think it definitely could, but it doesn't guarantee it at all. Amazon coming with the biggest beats in the world. Listen, folks, Microsoft came in with a grade A income statement. A grade A. And what did that stock get? It got a 3% gain. The stock's actually down in the past 3 months, even after that A grade income statement yesterday, right? What about Google McDougal? Google McDougal had an A+. We can call that like a 97%. If this was a test, they got like a 97%, okay? Google McDougal, A+ earnings, and what did Google get with it? Down 9.6% today, down another 2.5 percentage points after hours. Are you kidding me? And it's not even like Google went into this like, oh, it's a super high PE stock. No, it's actually a super cheap PE stock based upon any of the trends this stock has had over time, right?